Hello, everybody. We'll get started with the webinar at this time. My name is Troy. I'm a senior account manager with AvaTrade. Before we get going with the fundamental analysis and some technical analysis to go along with it for that matter, let's do a quick systems check. If you're seeing my screen okay and hearing me clearly, just type okay in the chat box. Okay, great. I've got enough responses. Thank you very much. So I think we all are aware of what's been going on fundamentally this week and really heated up last Friday and through the weekend with the coronavirus situation, fears of a possible pandemic spreading across the globe, these sorts of things. It's created, obviously, from a selfish perspective, some great opportunity for catching large movements and great potential profits as long as you're managing the risk on the downside accordingly. Things have worked out quite well for many traders. Obviously, we're wishing everybody well with regards to the virus, but let's see what's going on in the markets. That's really the main driver right now of things. And there's some other fundamental news stories and things to look at as well, which we'll take a brief look at before we get on the charts. In general, as always, we need to go over the risk warning. All investments have risk. I think we all understand that. No one trade or investment is guaranteed to profit. On the downside, it makes sense to manage your risk, either with stop losses, hedge trades, or whatever way is appropriate for your trading strategy. Keep in mind that what we cover is not meant to be financial advisement. We're coming from an educational perspective to hopefully improve upon or develop your trading strategies as we go along. Now, one thing to keep in mind when it comes to risk is we have with our AvaGo app. If you haven't used it yet, I recommend you download it to your mobile devices. The AvaGo app has a feature called AvaProtect, which allows you to protect trades on pretty much all the FX pairings, gold, silver, for defined time periods. And no matter how much it might go the wrong way during the covered period, all of that's added back when the covered period ends and your trade can keep running. Or you can close it during that time period and any negative gets added back to your account immediately. And obviously, if it's profiting, which is what we hope in the first place, your only cost is the small premium that's shown to you up front as you're adding the coverage when you set up the trade. And that AvaProtect coverage can only be added when you're first opening the trade. You can't go back and add it to an already opened position. And if you have any questions about that, there's a video on our website. Maybe we'll have the time to look at it. The page that outlines the feature and the app, but it's there on our main website. You can find it under the different trading platforms that are listed and the apps that are listed and see all the details on it. So as we go forward, keep in mind there are two main types of fundamental news. One is the kind you can predict in terms of the scope of what it's about, the timing of when it will be, and the general level of impact that that type of news has. And that's what we call our regular economic events. There's an economic schedule. We'll look at one today as we leave the slideshow here in a minute, and we'll see what were the scheduled announcements that already occurred today. We'll also look at what is upcoming. What can we expect in terms of potential news with the scheduled announcements? Then there's another type of fundamental news, which is more like this coronavirus thing, where we don't know what the next breaking headline will be, and we don't know when it will be. So that's what we call extraordinary economic events, types of fundamental news that affect the economy that just can't be predicted in terms of timing or even scope in terms of what it'll be. And so as you're putting your trading strategy together, you need to take into account both types of fundamental news, that which you know and can predict in terms of when the announcements will be and what they'll be about. And you also have to prepare within your trading strategy for things that you don't know might pop up out of anywhere. So you might have the greatest plan, the momentum's in your direction, and that unexpected, extraordinary economic event occurs and everything reverses potentially. and you've got to have a backup plan in case that happens. And so I say you have to. You don't have to, but it makes sense many times that you do have a backup plan in case the extraordinary news hits, the unexpected stuff, so that it doesn't blow everything out of the water and mess up your whole balance. Okay? Any questions as we go along, please keep in mind. You can ask questions at any time. You can give input. I don't mind stopping, repeating stuff if you missed something or didn't understand. For your cell phone, Imran, you can use the AvaGo app, which I was mentioning, okay? For different operating systems with your cell phones, the AvaGo app will work on most all of them. And also the MT4 mobile app. It's an older app. It's an older software. MT4 is made by a third-party company. It's been around for a while. The MT4 app works just fine. It's been used for years and people are happy with it, but the AvaGo app has advanced features on it, like the AvaProtect, and also like calculating when you put your stop loss and you take profit. The AvaGo app will calculate the risk in dollar amount or currency amount for your stop loss mark and for your potential profit, how much in dollars or pounds or euros, what your potential profit is as you're setting up the trade. It'll tell you as you're setting up the distance to those marks and your trade size, and it'll also tell you and calculate how much margin is required as you're proposing the trade setup within the order window. So the AvaGo app is very nice for that. It's only the AvaGo for now is only on the MT4. If anyone's trading on MT5, then you would need to use the mobile app other than the AvaGo. Okay, you'd have to download the MT5 mobile app. Okay, so let's get on the charts. Let's get to the news. Let's see what's going on. And so first thing I wanted to look at is, hey, let's look at something positive. Okay, I'm tired of all the doom and gloom. So S&P 500 futures, NASDAQ futures in the green. Okay, market, you know, these markets dropped off huge yesterday, over 3%, over 3.5%, some of the major indices. Okay, so it's comforting to see there's a little bit of a recovery today. People calm down a bit about this coronavirus, at least for now. All right, the shock of the fact that it's spreading to other countries and that it's a growing issue in Italy and Iran and some other places. Everyone's kind of taken that in and calmed down. Okay, and understanding that, you know, high 90s%, 99, 98%, maybe this whole virus is more like just the flu and doesn't really have long-term effects. Obviously, it's not good that 1 or 2% are dying from it, but it doesn't have to be something that people think is going to end mankind or something, right? So I think everyone's kind of realizing, okay, maybe we can calm down a bit. China seems to be getting things under control more, at least that's what they say with their numbers. There's less new cases, they're containing it well. And really, China's economy is what people were really worried about first off. Second largest economy in the world. And if they tend to be getting things under control within China, then maybe people will presume it can get under control in the other areas as well. Obviously, we don't want other major economies being shut down like China was for so long either. But, you know, things have calmed a bit. We can see that. We see the snapshot. Green on the futures. The red is from yesterday here. Green on the futures. And this is current. The fear index or the volatility index, it's dropping. What does that mean? If the volatility index is dropping, the fear index is down almost 8% today. Futures are in the green. What do you think gold is doing? Just from that fundamental picture right there. We didn't have to look at anything else. Green futures on the NASDAQ and S&P. VIX index down almost 8%. What's gold probably doing today? Yeah, gold's probably dropping, right? We didn't have to look to see that it has some bearish pressure on it, right? And so that's kind of the current momentum right now. And if we look over here, look at the euro. There's an announcement that came out on French business, better than expected. Okay, and the other announcement up here on the euro, not good. Okay, 0% for the German GDP. Quarter to quarter, 0% growth. That is weighted 3 times heavier than this green one. This is a 1 bullhead. Not really a big deal that was better than expected. If we look up here, 3 bullheads, it's high volatility expected from that one. No growth out of Germany, which is what the largest economy in the European Union. So that's really bad news for the euro right there. And that's really all we've seen come in thus far today that on the scheduled announcements that would have a significant effect on the charts. Really bad news for German GDP, for the European Union, and so for the strength of the euro. Without looking, we could probably guess euro probably dropped quite a bit today. Maybe some recovery coming back up, giving opportunities if you think the euro should still be weak to go against it based on the fundamental news here. Zero growth GDP in the German economy. Okay, so we've got announcements later today. So understand the US dollar will have some movement. You see this? And if these announcements come in negative, what do you think that further does to the NASDAQ, the S&P, the Dow Jones? If these numbers come in negative, especially consumer confidence, right here, 3 bullhead announcement, FOMC member speaking, the potential here is for large movement. Huge potential with these announcements coming, FOMC member speaking, those are the folks that determine monetary policy in the US. They've already been hinting that because of the coronavirus situation, that maybe the FOMC committee is going to talk about the likelihood of lowering interest rate again in the US. If that happens, typically the indices and the stocks go up when they hear the FOMC say, hey, we might lower interest rates, because that means cheaper money for growing business, for hiring people. So that could move the markets up depending on what they say. Consumer confidence, that also could be good news, could be bad news. We're not Nostradamus, right? We can't predict what the FOMC member is going to say for sure, and we can't predict what the consumer confidence report will be, good or bad. But we can predict that there's a high likelihood of large movements because of those announcements, paired with the fear that's still there regarding coronavirus and China and the rest of the world with it spreading. Okay, so just because the fear has paused a little today doesn't mean it can't rise right back up. Okay, so this sets up for potential through the afternoon and evening and into tonight for huge movements again on the Dow Jones, NASDAQ, S&P 500, on oil and on gold. Okay, all of those big movers, huge potential profits coming through the day today and through the night into tomorrow. So let's take a look at the charts in a moment. Headlines: South Korea to launch mass coronavirus testing. They're going to test something like 200,000 church members because it was spreading in their churches. What do you think happens if they test 200,000 people and they find, I don't know, a couple thousand people or 5,000 people or 10,000 people have the virus? What do you think that would do to the markets? Think about it, right? The fact that they're going to test 200,000 people creates potential for large movements on the markets, depending on what those results are. So again, we're talking about huge potential here. With a highly contagious virus, I suspect they're going to find more than just a few people are infected with it. So keep that in mind. FOMC committee, large announcements on consumer confidence in the US, countries testing, mass testing for people with this virus and the spread of the virus. Here's the headline: global stocks pause. Notice it doesn't say stop moving, pause. It's just a pause, right? There's going to be more movement one way or the other. What else do we have here? Falling exports bring German economy to standstill. We saw it. We just saw the report on the economic schedule, right? So not only is it on the economic schedule, it's in the headlines. It's in the major headlines. Everyone's looking and saying, wow, that's bad news. The German economy is at a standstill. It's not that it's creeping slowly. It's completely flat. 0% GDP growth. Bad news. Okay, South Korea to launch mass coronavirus testing. We just saw that. It's just another headline on it. Bloomberg, Mideast virus cases climb, prompting halts to Iran flights. guys and girls, I should say, the airlines are going to be hit hard on this. If you're looking at our platform, look at Boeing. We've got Boeing on there. Look at anything related to the transportation industry. You might find some opportunities for large movements. Okay, this type of news about flights being halted in and out of major countries, that can't be good news for those airlines and for transportation in general. Okay, so look for opportunities there. And then before we get on the charts, here's where you find under trading platforms, AvaTrade Go. Okay, there's AvaTrade Go. You can download it either in Google Play or the Apple App Store. You can click the link, it'll take you to it, or you can just keyword search in the App Store and you'll find it. And then also you can see within that app is AvaProtect, which is also found here. And there's what AvaProtect looks like when you're setting up your trade. You'll see it if it's on an asset that it's available. It'll be down here where you're setting your stop loss and take profit. You pick the length of time, and look at this example. This was a live example. For one full day on the Euro USD with a trade size of 10,000, which is a pretty sizable trade, only $16.50 or so cost for that whole time period. That's the most you can lose during that time period. It's covered for that premium cost. That's the way it works. Okay, so it's a really nice feature. You can watch a video on it as well here. There's a video on AvaProtect as soon as it loads. There it is. And it also shows you the features and how it works and explains things about it. Okay, so especially during times of volatility like now, what a great setup, what a great option on a trade. If you're setting up a gold trade and you think, wow, it could go up $30 or it could go down $30, and on the downside or the upside, depending which way you're going, if it goes the wrong way, you're covered for a flat cost. You know the complete level of risk, and that's it. So during that covered time period. So very nice, AvaProtect. Everyone in the webinar, if you don't have the AvaGo app, get it, check it out, especially if you're trading on these volatile assets right now. It could be an option that would work well for you. Okay, so let's get to the chart. I'm on my demo. You all are welcome to be on your live accounts, separate from looking at my screen, whatever you want to do. Keep in mind that what we're covering, I'm certainly not telling anyone to take this trade or do that trade, but it's all based on fundamental news, technical analysis, and then doing what you think makes sense based on what we cover. Okay, so this is the euro, right about here. You see the support level, support. Guess what made this support break? Look at the timing. What do you think made the euro break through this support level and plunge? Why was it predictable? Oh, about 9 o'clock this morning, UK time. What did we just look at? Right when this broke, guess what announcement came in? Right here. German GDP. Okay, 2 a.m. New York time, that's 9 a.m. I'm sorry, that's 7 a.m. UK time. Okay, so the German GDP numbers came in completely flat, zero growth at all from quarter to quarter. And so right after this number came out, if you had checked the economic schedule, you knew, hey, there's a big announcement coming up on the German GDP. You go to the chart, you see, oh, this is up above a support level. And so what kind of pending order could you have put down here in case it was bad news? What kind of pending order would have got you in without even having to stick around for when the announcement occurred? What kind of pending order would have sold as soon as it broke the support after those German numbers came in? A sell stop, exactly. Imran, you were first. Sell stop, very easy strategy. Again, the reason I'm going back is not to rub it in as to how easy that move was to prepare for. The point is there's stuff like that coming still today. There's large announcements, just like the German GDP, okay, that we know we don't know, and we didn't know that was going to be such a bad number. But we knew if it was worse than expected, that then it would likely do this. So then when the movement was up above the support, and the announcement hadn't occurred yet, and you know, okay, it's close to the announcement time and it's above the support. You put your sell stop down here in case the news is bad, it breaks and boom, down it went. We're talking from 83, let's say you got in about 83, 85, somewhere down here, or even let's go lower, 83, 83. Even if you didn't catch it at the lowest point down here and it bounced back up, you got out now, that's like 50 pips profit. 50 pips to where it is now. And honestly, you would have probably taken your profit here, right? Support, 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 breakthrough coming down. Look exactly where it bounced back up, right on the support. Support, support, support. The breakthrough happens. There's no more support until it hits the next support level, and that's exactly where it stopped and bounced up. And had you looked at that and set up this pending order as a sell stop, you put your take profit just above the support, maybe there, which would have been 83.47 or so. Listen, that's an easy, let's say 40 pips profit anyways. You could have made 40 to 50 pips profit on that pending order. That is a huge amount of profit for a scalp move. And what I mean by scalp is you're getting in and out quick. You're not holding it for a week or something. You ride the momentum with that horrible announcement on the German economy. It breaks the support. It triggers your sell stop. Once the momentum stops and it was going sideways and it was above that next support, take your profit. 30, 40, 50 pips profit. That's tremendous in a short period of time. Okay. So that's one example of what could have been done. Okay. And so what further could you do with this move? If it comes back up to another resistance level, here's a resistance, 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 right? If it comes back up to that resistance level and you check the news real quick, right? Always check the fundamental news like we did. It only took 10 minutes. Check the news. And then you see that it's up at the resistance level you like. Then you could have a sell limit prepared, or you could do a market sell off the resistance level, going with the fundamental news. Now, I don't know what the fundamental news will be if this gets back up here, when it does, but you can check it, right? You catch it in the right spot sometimes. Or you could just put a pending order, understanding, well, there aren't any more Euro or GBP announcements today, nothing major anyway. So you put a pending sell limit. If it makes its way up here, maybe you expect it won't break the resistance because of that bad news. If you're trying to be less perfect and you want to go with the fundamental news now, you could sell on the Euro GBP now. Take a smaller trade, then you can put your stop loss further away, up above the resistance without having to risk more. And you go with the fundamental news if that's what you believe will happen. Okay? The Euro certainly could drop right back down to that support level. Okay? Imran, there's no one defined time period. Because this was a scalp move, I'm looking at 30 minutes. There's nothing wrong with also saying, look at the 4 hours. If it breaks the next support level, right? Remember, we're looking here. Support, 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 support. This was the first take profit mark. Let's go to 4 hour. And let me get rid of these lines. Okay. Where's the next opportunity? Who can tell me? If you think the Euro will keep dropping and you're waiting for confirmation that the momentum is still down on the Euro, maybe you don't want to guess that it'll break the support. What do you wait for? Okay, here's the support level that it dropped to. Okay, it dropped from up here with the announcement all the way down to this support. It bounced back up. Looks like it might try and test the support again. What kind of order could we prepare right down here in case it breaks the next support level? Sell stop. It's like deja vu, right? We're waiting for the same thing potentially to occur. It broke the first support and plunged. Maybe it'll break the second support and plunge. If you prepare a sell stop right down here, I don't know, on 83.39 or something, you pick your spot. Your stop loss you could put back above the support. Okay, if it's truly large momentum, it should do like this one did. When it broke the support, it plunged all the way to the next support level. If it's strong momentum and it triggers your sell stop, it potentially could drop to the next major support level, which is down here. Support, 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 which looks like it'd be what? Another 50, 60 pips drop. Okay, no guarantee it'll happen, but if it breaks the support, it might be worth a shot with another sell stop. Okay, that was pretty bad news for the German economy, the GDP being zero. Okay, that might increase the likelihood of more government assistance in the Eurozone, which then weakens the euro typically. So there's a potential opportunity. We saw an example of it working once here. It could potentially happen again, another breakthrough. Okay, don't think just because it dropped some already that it can't drop more. Certainly could. All right, so next let's look at something different, Euro JPY. Why might it make more sense to prepare the euro against the JPY? Okay, same thing. Look, support, 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 support. And now it's on that support again. Here's the drop today because of the bad announcement. It dropped against the yen, just like it did against the pound. Okay, why would I maybe put my sell stop against the yen down here below this support rather than against the pound? Why would the yen maybe strengthen again today? The yen is a what? Like gold. The yen is a, 2 words, safe haven. Good, Sharon. So because the yen is a safe haven, the coronavirus isn't gone. It's actually spreading kind of rapidly. The headline said, okay, the fear was paused. There's a pause in the fear, right? Markets are expected to pick back up some today, maybe. The futures are green. It would not take much. Maybe South Korea testing 200,000 people, finding that a large number of them potentially have the virus. Something like that could happen. You know, that type of fundamental news I mentioned, the kind that comes when you don't expect it. Okay, the extraordinary fundamental news, not the planned economic announcements. We don't know what it might be, but if an article comes like that, if a headline comes that raises the fear right back up, what do you think happens to this support level if that happens? And how far do you think this might drop? Because the yen would strengthen if gold starts strengthening, most likely. Okay, it's typically what happens. So if this support breaks with more fear about this virus, look at the potential. Look at the potential. If it breaks through and plunges like it already dropped today, the euro dropped today, right? Even with the yen and safe havens holding steady, the euro still dropped. What do you think the euro with its bad German numbers might do if there's more fear again? And if safe havens start to strengthen, it's obvious, right? We're looking at if it broke this support and dropped to this next support level down here, we're looking at, let's say, entry at 119.55, and next support level isn't until 118.55. Okay, that's 100 pips. 100 pips drop. Okay, potential. If it breaks the support and drops to the next support, huge potential. How much do you have to risk if you put a sell stop down here? Prepare a sell stop in case it happens. Just put your stop loss maybe above the support, which should become resistance if it gets broken. Shouldn't go back above if there's enough momentum, right? And you put your stop loss back above. If it breaks back up, fine, you're out. No problem. Small risk for a potential profit that's much, much larger with a lot of fundamental news to back up why you think that might happen. Bad numbers out of Germany. That's one fundamental reason the euro might drop against the yen. Potential pandemic spreading worse. That's another reason the euro might drop against the yen. So this is why it might make sense to pair the euro against the yen instead of the USD. If we pair the euro against the USD, what do you think happens to the strength of the USD if the FOMC committee tonight says they're going to lower interest rates maybe? Remember, we looked. There's a scheduled announcement tonight, FOMC committee, interest rate talk potentially tonight for the US. With a potential pandemic, what do you think they might allude to about interest rates in the US? Maybe they might say it's more likely they'll lower interest rates, which would cause the USD to weaken potentially. So why pair the euro against something like the USD when you could pair it against something like the yen that has a lot of reason maybe to strengthen? Okay. The idea is if you're going against the weak course, you want to try and pair it against what you think will be a strong course. And the only way to do that is to look at the fundamental news and logically think which two make the most sense to pair against each other. Okay. So I like euro yen better than euro USD to prepare for a potential breakthrough, because if it breaks the support, it largely could be because fear rises back up. And if that happens, we saw what happened yesterday when the fear got out of hand. The markets went crazy. All right, so and anyone have any questions, please ask as we go along. So let's look at gold. Okay, we see this was Sunday from here to here. Okay, this was the close on Friday. This was the open Sunday night / Monday morning. Gold gapped up about $10 and didn't look back until it hit nearly 1690, 1688. So we're talking it went up $40 or so, counting the gap and the run. Huge, huge movement. Guess what? The fear calmed down today. We read the headlines. The sell-off is on pause, according to the headline, and gold pulled back down. Okay? And it pulled all the way past the gap. And now it's sitting right in this gap. You see here? This was the gap in price from from Friday's close to Sunday night's open. Okay? So the fact that the price, look where I'm going to draw this line. The price is right in the middle of that gap. That tells you something. Right in the middle of the gap, right in the middle of where it was before the fear and after the fear. It's almost like it's waiting. The market's waiting to decide, is this going to break back above the gap? Or is this going to drop back below the gap? So guess what? What two pending orders could you put? Without having to guess, you can set up for both occurrences. If there's bad news again about global spread of this virus, it should break back above this gap price, and that could be your entry as a buy stop. Okay, you could have a buy stop above the gap, above the open price from this week. So maybe right about there where I drew that line. If it breaks up above the gap price here where it opened Monday, Sunday night / Monday, then there must have been fear coming back to the market, right? And then a logical place to take your first profit might be the high point that it reached yesterday. Okay, again, if you get in here, prepare a buy stop now, the potential profit is what, $30 or $25 climb? Let's say 25. And the risk, if you get in here and then have your stop loss, if it comes back down and enters the gap space, your stop loss is back down here somewhere, you're not risking nearly as much as your potential profit. Of course, it could go up and come back down. Markets do that a lot. But you only need to be right once out of like 3 or 4 tries when you're setting it up like this, and you can still profit. Okay? Potential profit, $25, risk, $5. And you only enter strategically if it breaks out of the gap above that gap price, because the last time it went above this gap price, it rose another $25 or $30. So in your mind, you say, okay, I see the pattern. It might not happen again, but it's likely it could happen again if fear comes back. And it could even go further than yesterday's high, for that matter. Okay? If you're asking how high could it go, let's look at 1-month candles. The last global crisis was the housing crisis, right? The sell-off of the real estate market, the banking crisis from all the loans, the bad loans. That was the last major crisis. And look, it entered that zone. You see here, this was the support back then and the resistance. It never went back since 2010 until now. It broke this old support, which was resistance, and it's up and running, and the next resistance isn't until 1800 or so on the 1-month candles. So if you think 1670, 1680 was the highest it could go, think again. If enough fear comes, the virus starts spreading even worse, and other major economies have to go into, quarantine of hundreds of thousands of people like China did, there's no reason why it couldn't go up to 1800. So that's what helps. Some of you are asking, do you only look at 30-minute candles? It depends on what you plan to do. Are you scalping only on 30-minute candles, or are you looking for bigger picture of what's potentially possible? Okay. And I'm not saying that this crisis is so bad it's going to climb, that gold will go up to 1800. I'm just telling you it's in that zone now. It's past the major resistance, which was down here around 1540 or so. Okay. So let's go back. Shorter candles, 30-minute, 1 hour. Here's our gap we were looking at. If it breaks into the gap, potential buy stop opportunity. If it breaks below the gap, which would be below this close price from Friday, potential sell stop opportunity. So you can prepare a buy stop up here, a sell stop down here, above and below the gap price from yesterday, and just wait it out. And you don't have to risk much. And you know what? You could even put AvaProtect on it. You could prepare it with AvaProtect, and then you know exactly what your risk is. And then you don't get stopped out, right? If it goes back and then comes back the right way. I've never been a big fan of the Swiss franc JPY pair, because the Swiss franc traditionally was also a safe haven, just like the yen. Not as much anymore, but still, technically speaking, Swiss franc and yen are both safe haven pairs. So you'd be potentially pairing strong horse against strong horse if there's fear, or weak horse against weak horse if there's happiness in the market. I prefer to put the Swiss franc or the yen against an alternate currency that is not a safe haven. But you may find some times when Swiss franc JPY is good for you. You certainly could. In terms of the word advise, Sam, I can't advise you to buy or sell anything. I can show you, like I did on the screen, the fundamentals and the technicals. You have to decide to buy or sell. Yeah, I'm not here to tell you what you should do, but certainly you can make up your own mind based on what we see here. Okay, a gap, it's in the middle of the gap. Look, this is called a market that's being pinched. You see that? It's narrowing. It's narrowing. High points are getting lower. Low points are getting higher. It's being pinched. What do you think's about to happen soon? It's getting pinched, tighter, tighter, tighter. What has to happen? The market's getting tight. The high points are getting lower. You're asking what is pinched. I mean, if you're squeezing something with your fingers tighter and tighter, there's not much room to go. It's got to break out one way or the other, right? It's got to break out one way or the other. It's getting tighter and tighter and tighter. High points are getting lower. Low points are getting higher. We've got the top of the gap up here. We've got the bottom of the gap down here. It's just waiting for a news report. It's waiting maybe for those U.S. announcements later today. It's waiting for the FOMC committee maybe to have a statement. Remember, we said it's about opportunity. And the major events that we outlined that are still going to happen today economically, the scheduled events, and also the things like 200,000 people being tested in South Korea for coronavirus all at once, all of these things give potential. So there's the potential for a large breakout up or down if it goes below the gap price or above it. And it's one or the other is going to happen. It's going to go one way or the other. You can cover both directions and have potential profit in either way. Okay. And if you use AvaProtect, you don't even have to put a stop loss on your position. Here's the advantage of AvaProtect. Let's say you do a gold sell stop. You don't put a stop loss back up here. If it drops, triggers your sell, kicks back up, it could come all the way back up here before it drops, and you don't have to worry about it because all that risk is covered for a flat cost. You have no stop loss. It doesn't hit your, What happens sometimes with the stop loss? It goes down, triggers your sell stop. It goes back up, hits your stop loss, then drops. And you say, oh, I missed it. I took a loss because my stop loss was too close. I didn't want to put my stop loss further away because then I have to risk too much for my trade size. And so AvaProtect makes it so, let's say you do a full day's coverage, AvaProtect on gold. You have your stop loss, sell stop here. It triggers your sell stop. It comes back up. You can wait a whole day, watch it bounce around, and eventually if it drops down, you make your profit. If it bounces around up here and the 1 day period ends, all that negative's added back, the trade's still running, now it's like starting even again. Okay, this is the power of AvaProtect. Or you could manually close it. If it went the wrong way, came up to this resistance level and you thought, now it'll drop, then you can manually close. If the covered period isn't over, take all that negative back into your account if you think at that point you'll open a new position and it'll drop. And then guess what? You could cover that one too in case it breaks this resistance. And so you're just, the only risk on these huge potential movements is the premium cost. Really a great feature to combine with these type of breakout strategies when there's days that are potentially highly volatile. Okay. All right, so crude oil. Let's look at crude oil, and I think we'll call it a day. Okay, so crude oil still having problems. It gapped down when gold gapped up Sunday night, Monday morning. Oil gapped down, makes sense, right? If people think there's fear for economic reasons, a slowed economy because of a virus outbreak, well, then slows demand for oil too, typically. So it makes sense that oil jumped down and continued to drop. And just as gold pulled back down today, oil pulled back up, okay? A bit of a correction. Let me ask you, is China's economy still likely to take a hit because of all of this shutdown they did with the coronavirus? Probably, right, over the next quarter. It's already been predicted. China even readily has stated it themselves. They expect, this first quarter numbers maybe are not going to be so good. So even some of the experts are saying that there could be a certain percent drop in global production, not just China, just with the damage that's already been done from the virus. That's not counting anymore. What do you think all of this type of bearish news does for oil prices? Yeah, tends to push it down. If there's fear that there's slowing economies, and then if you get reports like the German report today, 0 GDP growth, that's not good for oil prices. Okay, so you could pick your spots with oil right now. Fundamentally speaking, you might think oil is bearish, and so you might put a resistance level. Here's the resistance, old support, breakthrough, resistance. Okay, if it nears the resistance, you do what makes sense fundamentally, right? And technically. Now, could there be a breakthrough with maybe a vaccine for this virus? Could come out, maybe it's good unexpected news. So you could have a pending buy stop just in case the unexpected thing happens. You could have a pending buy stop up here just in case there's good economic news that comes out. And at the same time, you could do a market sell with your stop loss up above the resistance level. Okay, it's all about opportunity and playing it like a chess match. Not I'm selling and that's it because I think it's bad news for oil and I have to be right or else I lose. It doesn't have to be that way. You can say, I think I'm right. I think oil is going to keep pushing down off the resistance like it's doing now. I think it'll at least drop to this next support level. So maybe I take a market move. I could be wrong, so I'll put my stop loss up here and have a buy stop just in case some unexpected story makes it reverse. You limit your losses, you go after the high potential profits, and in the end, hopefully you become that third or so of traders that profit long term, okay, that are able to actually beat the market, predict the market better than in profitable ways, more often than in non-profitable ways, okay? Maybe better than 50-50, I was going to say, but it doesn't even have to be better than 50-50. You just have to have that more profit than loss in the end. Okay, any questions? Comments? And certainly we can look at, indices. Major indices dropped down, continued to drop. They pulled back up today some. Whoops. I want a horizontal line, not vertical. They pulled back up some. Resistance, resistance, resistance. These were opportunities, by the way. Once this resistance level was formed today, just a few hours ago, you could have been trading down off that resistance. If it comes back to the resistance, sell limit. You could prepare a sell limit now if you think that the markets are going to drop more today. But we saw the futures were green, right? US market opens in an hour or so. Usually when the futures are green, when the market opens, that's the direction of the momentum. So besides the idea of if it reaches the resistance, you could have a sell limit that sells, what might you prepare right up here? There could be a run through this resistance when the US market opens. We see it's green. The volatility index, the fear index is down. Yeah, buy stop. And you know what? If you think the fundamental news is against the markets dropping right now, which really it is, the current news as we know it is the volatility index was down 7% or so when we looked a moment ago. The futures are green. So the fundamental news as we know it right now is maybe you don't do this move. You don't prepare the sell limit. You prepare a buy stop above the resistance. Okay. Why would I prepare? Sure, we can do NASDAQ. Someone's asking. So NASDAQ, and let's load the chart then. NASDAQ, resistance level here. Okay, resistance, resistance. If we want to do a buy stop up here, why do we do the buy stop after it goes through the resistance? Confirmation of an uptrend, of momentum. So you wait for the breakthrough. The concept of a buy stop is momentum. That's the whole point of a buy stop. Buying from a higher point than it is now is counterintuitive. Why would I want to wait for it to go up to buy? The whole point of a buy stop is confirmation. So maybe at that price there, if it breaks through the resistance and hits 92.45, and you can pick your own spot, obviously. We change market execution to pending. We do buy stop. Okay, pending order, buy stop. I drew a line at 92.45. You can pick your spot wherever you would think that you're convinced it's an uptrend. Stop loss then would be back below the support somewhere. 91, let's say 91.95. $91.95. Take profit. Where might you take your profit? Look here. This was the gap, right? It gapped down. Likely, if this runs up, when it reaches the beginning of this gap is where it could pause. That's the resistance level, right? If it returns, if this is a breakthrough and then it returns to the gap, we're looking at 93, just below the gap, right? Is this line that I drew? 93.39. 93.39. So that's almost 100 points up, right? From 92.45 to 93.39. Okay, almost 100-point risk or potential profit. We're only risking about 50 points. So nearly a 2-to-1 ratio potential profit to risk. Okay, with the way I set it up. Okay, there we go. Pending order. Okay, buy stop, ready to go. If it hits this dotted, or I'm sorry, this line up here, you can't see it because I drew some lines. Let me delete the line. Actually, I can just double click on it. Oops, that's not what I wanted. There we go. Okay, the green dotted line is my entry price. All right, it's above the resistance. So if it hits that, it broke the resistance. Likely there must be momentum then, and I expect that it potentially could climb to the next resistance level before pausing. And so potential from entry to first level of resistance that I see, about 100-point climb. If it activates, my risk to get below that support level then is about 50. If I don't want to risk that much, fine. Let me move it up some. Now I'm only risking maybe 40. It's still below the breakthrough point. Okay? So there's how you'd set up a buy stop with a logical reason for the spot you enter and a logical reason for the spot you might exit. The trade size, you can do any trade size you want. A quarter of a lot. Let's look. You see here, it tells you one lot is 100 indices. One lot is 100. So the volume of 0.25 is 25 indices. So you're making $25 for every dollar it goes up. So if it goes up 100 and you take profit, you made 100 times 25 at 0.25. So it always tells you for any asset, one lot equals however many, and then you put how many lots you want. So a quarter of a lot means 25 indices. So it's $25 for every dollar it goes the right way or wrong way, right? You're risking 25 or you're gaining 25. So 25 times, if it went 100 the right way, $2,500 potential scalp on a scalp move, right? And how much am I risking if I'm only letting it potentially go down 40 or 30 to my stop loss? A quarter of that, a third of that, okay? You know, sometimes these breakthroughs, especially with the volatility we've had, once they break, they just run. So if you want to risk less, you know, it's more likely to get caught on a spike back before it goes further up. But if you want to take a shot that it'll just break through and run, your stop loss can be closer. You don't have to risk that much. You can have it just back below the support. Okay, now I'm risking half as much. Okay, but understand, the tighter you put that stop loss, the closer you put it, sometimes you'll get a breakthrough and then it spikes a little and then it runs further up. If your stop loss is too close, then it messes you up. But what did we talk about that you could do instead of a stop loss for a minimal cost? Don't put a stop loss. If it breaks through and triggers, it doesn't matter if it comes down temporarily and goes up. If you have AvaProtect, you pay a small premium cost and you can wait it out for a day to see if it'll come back up here. 2 days, whatever time period you put for the coverage. Really nice feature. It really is for these strategies. Good questions. Any other questions? And certainly, yeah, of course, you could put a sell stop down here. Here's the support, 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 support. And I would say do it. If you want opportunity in both directions, put a sell stop below this support down here. We saw the Dow Jones drop 1,000 points at open yesterday. So just because it's down as much as it is here on the NASDAQ and the Dow and the S&P doesn't mean that if it breaks this support, it can't drop a lot more. Okay, so as much as we're talking about the potential for a buy stop breakthrough and potential profit up, you also could prepare a sell stop in case it breaks the support. Because guess what? There are big announcements today and anything could happen with them. Okay, no, you're right. You're right. AvaProtect currently is not available on NASDAQ. I apologize, Paul, and everybody else, but it is on gold. So same concept. You can apply these breakthroughs with gold as well, with silver, and with any currencies. All right. What currency pairing, since AvaProtect is available on currencies, besides putting it on the gold moves that we looked at, what currencies are related to China? Number one currency that's related to China other than China's currency is Australian dollar. So you might pair the Australian dollar against the yen, and you have huge, huge potential for movement with the Australian JPY. Do the same thing we did here. Find support and resistance levels because Australia, the number one export is iron ore and also coal. Their number one buyer is China. So as China goes, so goes the Australian dollar many, many times. So find your breakthrough levels just like this, but with the Australian JPY. Huge potential for movement. If anything with these breaking stories comes out, good or bad, you could have a huge recovery for the Australian dollar or a huge plunge, further plunge. Okay. All right, great, everybody. This is a good place to stop. If you have any trouble getting the AvaGo app or using AvaProtect with gold, silver, and currency pairings, and Paul, you're right, not on the indices as of yet, but hopefully in the future. It'll be available on those. If you have any issue with getting the app going or using those features, just let your account manager know. They're happy to help. Okay, bye for now, everybody. Thank you.